Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield App, an innovative digital wealth platform that allows you to earn passive income on the world's leading digital assets with a single click of a button. Visit yield.app for more information. Hello and welcome back to the Crypto Pulse podcast for another one of our weekly ramblings about crypto and all things macroeconomics. Ben, well, what a week it's been. I've seen nothing like it in all my life. How are you?
Yeah, I'm all right. I've just survived the week, thankfully, which is more than can be said for some of the crypto projects out there. Yeah, it's been like the strangest week, because we've been in this space now since 2017, and I've been in since really the beginning with Bitcoin, and I can honestly say that of all of the crazy events that have happened, this has been one of the wildest. And strange that it would come at a time where, the crypto space was starting to feel a little bit more mature, starting to pick up institutional interest. But yeah, I think that the old saying, never too big to fail, goes this week. Yeah,
definitely. I mean, I still can't believe it, even though it's happened. It's bizarre. But I guess we'll come on to a little bit more about that in a bit.
Yeah, absolutely. So I think it'd be a good place just to start with some of the macroeconomics, talk about where the market's at, and we will absolutely get on to the TerraLUNA story a little bit later in the show. But at the point of recording, it's worth noting Bitcoin is actually trading at around 30,000 again. We're back above that 30,000 inflection point, having dipped as low as 25,000 during the shitstorm this week. I have to say, all things considered, with interest rate hikes definitely now confirmed for June and July, the CPI print was this week. It came in at 8.3, 2 basis points higher than what was expected. Actually, risk assets haven't taken that much of a tumble. I think a lot of this stuff is priced in. We know that the next 2 interest rate hikes are going to be 5 basis points each. Yes. So Bitcoin, with all things considered, has held really well. The rest of the crypto markets, altcoins, they've taken a bit of a battering. Lots of people calling a bottom around that sort of $25,000 mark. And I have to be honest, I think in the context of crypto, had this event happen this week and we wick down to 25k, I might have been inclined to say, yes, that's the bottom, that's our pivot point, now it's up only. But looking at the S&P, do I think that stocks and equities have bottomed out yet? I don't think so. I think we've got some way to go. I think the Fed were originally aiming for a bit of a soft landing. I don't see how that's going to happen. I think we're going to have a hard landing, and I think we are going to go into a global recession. That's going to hit equities. It's going to be a bit of a slow bleed. And I think that Bitcoin will follow. We've spoken about it on the show before. Crypto is a risk asset. It behaves like a risk asset. It's still not that sort of panacea, the hedge against inflation that everybody wants it to be. So I think what we're seeing today, so it's Friday the 13th May, is a bit of a dead cat bounce.
Right.
Friday the 13th.
Go figure. I'm with you on the dead cat bounce. I mean, for sure. I mean, you could open a short position here if you felt that was a good idea, but I'm very suspect of this of this bounce. In fact, when I woke up this morning, I think the third thing I did was have a look at the charts. I was like, oh wow, okay, I was quite surprised to see that bounce, but I'm very, very, very cautious about that.
it's a nice sea of green, and as we've said, I think when we're in a confirmed downtrend, you have to flip your way of thinking. When we're in that sort of, when we've got that upward momentum, you buy the dips, and buying the dips, you add to either your hold or you take a long position, and you take profits on the way up. I think when you're in a confirmed downtrend, it's very difficult to know when to switch that mindset. And actually, I'm hearing people are buying the dips now. I don't know if that's a good strategy. It's not the strategy that I'm playing personally. Certainly not for taking long positions. If I'm adding to my whole portfolio, I might just sort of dollar cost average on the way down.
Sure.
That seems sensible, but I would avoid using any leverage long positions. And I probably, now is the time for capital preservation. We're not going to make big money this year.
Yeah, well, we spoke about that last week. And if you haven't listened to that episode, please do. We were talking about is the easy... what did we call it? What did we call the episode in the end? Is it game over for the easy money?
Is it game over for the easy money? Yeah, and I think we came to the conclusion last week that it probably was, at least for the next 12 to 24 months. We just have to go through a correction period. The Fed's sort of quantitative easing and this sort of like economic stimulation that we've seen for the last few years just couldn't continue. There was so much brand new money injected into the system, and the Fed's balance sheet has shot up. It had to come. It had to come. And so interest rate hikes is one of the tools that the Fed will use to soften the economy a little bit. But, they always say this when they sort of go into these tightening periods, that the plan is to create a softer landing. But it never works. It never works. They always push it too far. We always go into a recession. And at that point, then the Fed have to decide whether they want to reverse their position and whether they want to go back into a sort of mode of quantitative stimulation. But we'll see. We'll see what happens.
Yeah. So I'm with you on this. For me, it's not a time to go long on stuff. I have been adding bits and pieces to my whole portfolio. I bought positions in projects that are, in my mind, really solid. Some of them are VC backed. They're the blue chip stuff. This isn't a time where I want to be going into some of these more speculative newer tokens. Because I just remember the last bear market, we saw so many great projects, so many great ideas, so many great concepts. And I thought, I'm going to buy a little bit of that. And I bought that, maybe at the start of 2018. And then for a couple of years I was holding those, and the projects just didn't have enough funding or runway through a bear market to survive. So I think you've got to back the smart projects, and I think you've got to back the bigger ones at the minute. Or that's certainly my thought process anyway. In a bull market, it's really easy to go into like a 50 million market cap. I'm not going to call them shit coins, but you know what I mean. and make some money. And those days are certainly over for now. And if you look at market cycles generally, that those opportunities don't come around that often. So yes, you might be able to pick some gems up at the bottom of the market, and you might do well. But it depends on your own risk tolerance. And for me, again, it's about that capital preservation and making sure that I've got something there for when the bull run happens. And we're not pro traders. We've spoken about this on the show a number of times. There's some very competent traders out there that are making money shorting the market, which is wonderful. However, you need to be really skilled at doing that. And even some of the ones I follow, I've seen them make, quite big mistakes. So I'm not totally convinced it's a good strategy, even if you are that experienced. But
Yeah, you're absolutely right. I think that I liken it to surfing, going out when the waves are sort of calm. If you're a beginner, you'll go out and probably have a good time. But if you go out and the waves are 20 feet high, then you want to leave it to the pros. Mm-hmm. And I think that's where we're at with the crypto markets now. It's player versus player. The environment isn't great for novice traders. The macro backdrop is not good for novice traders. So just sit it out, sit in cash. people are like, oh yeah, but inflation, my cash is depreciating at 8% per annum. That's true. But it could be worse. You could be sat in Netflix stocks or Bitcoin and you could have lost 50% of your net worth overnight.
Yeah, and I always say this is that, yes, inflation is 8%, but what are you doing with your cash? What are you buying with it? Again, sound like a broken record. Could you invest some of that into starting a business? Could you invest that into personal development and training so you can make that cash into more cash? And then all of a sudden, then you're backing yourself rather than the market. I think that's a smart move at the minute. Some of the best companies that I've seen were built during a recession. So if we're going into a recession, there's always an opportunity to build other cash flowing assets. And I started a business at the end of a recession, the last one, and it's still going today. So, there are some options out there. And I know this show is primarily about crypto, but the only way that you're going to, do well in the crypto market is to have enough capital in a bull market to succeed. And that's something that everybody can work on between now and the next run.
Yeah, you're absolutely right. Some of the best projects and companies are built during bear markets. And actually, the next project that we're going to talk about on the show, we are going to get onto it, is TerraLUNA, which was built during the 2018 bear market and launched in time for this bull run. So it does go to show that actually, just because something looks like a blue chip, especially in the crypto world at the moment, there is, it's still a risky space, and you have to have a very high tolerance for risk to be in this space generally. And I think any of the TerraLUNA investors from this week will tell you that. In fact, I think probably most of them will be scared away from this space for good, because it's really been one of the worst things that I've ever seen.
I mean, it's just staggering how the project has completely crashed, and from a multi-billion market cap to what it is now, it's absolutely staggering. So, should we talk a little bit about what happened?
Yeah, absolutely. So this week, as we said, has been an insane and almost unfathomable for some in the crypto sphere. What was once one of the biggest stable coins on the market has now fallen from grace, thanks to a mixture of yield cuts and token dumps, with many people calling this a coordinated attack. Others are claiming that Kwon, the master of the UST stablecoin, has actually just received his karma. Now TerraUSD was a bit of an experiment. So it was a stable coin that is algorithmically backed instead of being backed by fiat reserves. So we know that we've got stable coins in the market like USDT and DAI that are physically backed one-to-one, pegged to dollar asset reserves. So whether that's cash, whether it's corporate debt, whether it's property, if all of the USDT was claimed at once, then the organization has technically got the liquidity to cover it. Now, algorithmic coins work very, very differently.
Sure do.
So they use a set of on-chain mint and burn mechanics. So there's two sides to the equation, and essentially, in theory, these mechanics are supposed to ensure that $1 worth of UST can be used to mint $1 of Luna, which serves as a sort of floating price shock absorber for UST volatility. But there is a major problem which can lead to the kind of volatility that we've seen this week. Now, for any of you that are on Twitter, I would highly recommend you go and follow @JohnWoo, who has actually explained this really well. So he says, it's really useful to illustrate using extremes. So let's say the price of Luna is 1 billion. Then somebody could mint 1 billion UST by burning a single Luna. And then let's say the price of Luna falls to $1 within a couple of minutes for no good reason. Then that person could redeem their UST for 1 billion Luna.
It's like two sides of the scale, isn't it, really? So
Absolutely. So what's happened this week is an imbalance has been created between that sort of mint and burn mechanic, and it overwhelmed the algorithm and has now created an environment whereby the balance just cannot be restored. And what we've seen with Luna is it's entered really into a stage of hyperinflation. So brand new Luna tokens are being minted almost every minute. The total supply has shot up infinitely and is unlikely to stop. And the algorithm is now desperately printing new Luna to try to restore the dollar peg on UST. And what you get, exactly the same as you get in places like Argentina, is this sort of spiral of printing and trying to balance the system. And as we know, I think once you enter into that death spiral, it's very, very, very difficult to restore equilibrium. And sadly, they haven't been able to. At the point of recording today, Luna has. Well, actually, let's talk about what's happened with the price action, because it's been, one of the biggest falls from grace that I've ever seen. I'm just trying to find it in our.
It was the speed of it as well, Ben, that was incredible. We've seen projects die a very slow death, but watching this play out was, absolutely shocking. And there was a point where I thought, God, this could bounce back up. So I just didn't think it would hit the floor so quickly. But once I understood the tokenomics of this project, because I didn't know an awful lot about Luna, it's not a project that I've studied. It's not something that I've been particularly interested in. But when I found out about the tokenomics and that there was so much Luna flooding the market, I thought this thing is going to die. There's no two ways about it.
Yeah, absolutely. So just to give you some context on that then. So last Thursday on the 5th of May, UST was at 99 cents to the dollar, which isn't unusual for a stable coin, especially an algorithmic stable coin. There are usually some fluctuations up and down, but the algorithm is designed to keep that balance and sort of restore it to that dollar peg.
I could take a 1% difference, that would be all right.
Of course, 1%.
Yeah. I could stomach that.
Yeah, of course. And the idea is that some arbitrage trading across the ecosystem then restores that peg. And Luna was sitting at around $82, which wasn't too bad, down from its $120 high, but the whole market had sort of taken a hit. Now, as we're recording the show today, Luna is sitting at 3,000th of a cent. So that's from $82 to 3,000th of a cent. And that's happened in the space of 9 days. And the UST dollar peg is at 33 cents on the dollar. So what's happened is that the system has desperately tried to restore that balance. Luna has now hyperinflated beyond repair, I would say, and UST has struggled to restore its peg. We had some moments in the week where it looked like it might have happened. In fact, I've just gone to check on TradingView to see what the UST to USDT peg was looking like, and TradingView is telling me now that it's an invalid symbol. So Binance have actually stopped reporting that data to TradingView. So who knows where that is now. Just to sort of add some extra information to this, because the real sort of Achilles heel in this whole mess was a product called Anchor, which was the lending protocol designed by the TerraLUNA team. Now, Anchor offers market-leading yields of up to 20% on the year to users that deposit their UST on the platform. So you could put a $1 million worth of UST into the Anchor protocol, and you'd enjoy a really nice 20% year-on-year yield with that. Now, most people believe that was unsustainable. And before the UST started its decline late on Saturday, Anchor was home to around 75% of UST's entire circulating supply. So it was around $14 billion. And with so much UST locked up in Anchor, it became clear that most investors were actually buying the stable coin solely to get to get the annual yield. A yield decrease, they said, would have sent UST depositors fleeing Anchor in search of higher returns. And though Anchor was never forced to decrease its yield rates too significantly, UST deposits dropped sharply through the start of the week from 14 billion to a low of 3 billion. So essentially they experienced a run on UST, which is why central banks were created back in the day, to sort of prevent the run on banks.
It certainly doesn't do the decentralized space any favors whatsoever, does it?
No, it doesn't at all. And Kwon stepped in, and because of course these guys were buying billions of dollars worth of Bitcoin as an asset reserve to collateralize the peg, and they've had to sell all that Bitcoin already. I mean, they only finished buying it last week,
which
so
has really affected the whole of the market, right? That much BTC being sold on the market has a domino effect through the rest of crypto.
It totally does. Now, Do Kwon, the founder, actually said on an interview only 2 weeks ago that with TerraLUNA even buying so much Bitcoin, that the failure of Luna would mean the failure of the entire crypto market. And he wasn't wrong. But one thing I will say is that Bitcoin has been through a lot of these types of events. We had Mt. Gox back in the day, and we've had a number of huge security issues with ETH. And look, I think it speaks to the resilience of the market, especially during a period where the macro is as ugly as it is, that Bitcoin has held its price around $30,000. There was a huge amount of volume. People have scooped up sort of the lows of 25K. I think these sort of events make Bitcoin more resilient. And actually getting rid of Luna, which was a huge red flag in the space, something that, it was kind of the canary in the coal mine. People have been saying for months that this thing is ready to blow. I'm sort of glad that it's being capitulated, honestly. I think it takes that element of risk off the table and neutralizes the space. It's given us a little bit of a reset. And whilst a lot of people have been really, really hurt by this, and we'll get onto that later in the show, I think it's a net positive for the future of Bitcoin generally.
Yeah, absolutely. I agree. Unfortunately, we're in a space that is not regulated, and you have these decentralized projects. And when you have something as big as Luna that's bought a lot of Bitcoin to collateralize their project, then when things go wrong, it does affect the whole space. And you can decide, do you want a regulated environment where these things are less likely to happen because there's more laws and legislation around what you can or can't do? Or do you want the ecosystem to actually figure out what's going to work and what's not in a real true market fashion, almost an anarchist catalyst environment? And that's a really good question to ask, and I don't think we're going to particularly answer it, because I think it's way more nuanced than that. But
it is.
You've just got to manage your risk, and these projects, whilst they may be worth taking a punt on, if you really believe in them, don't put everything in there. I have friends of mine that have been talking about Luna for a long while and telling me how great it is, and I've not particularly looked into it, but they've lost a heap of money, and they're not in a great space. So be careful. Hey everyone, I want to say a big thank you to YieldApp for sponsoring this podcast. YieldApp is an innovative digital asset wealth platform that allows you to earn passive income on the world's leading digital assets. Now, what we really like about YieldApp is it's a licensed fintech company built by a team with a strong background in traditional finance. YieldApp offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. So you simply deposit your digital assets and click earn to start receiving daily rewards. And if you're a corporate client, YieldApp offers a security treasury for all your digital assets. Its dedicated relationship management team is on hand 24/7 to facilitate a stress-free experience.
I think one thing I will say of this entire saga is, for me, a huge red flag for any project is when you've got a founder that is talking about price action and seems to have a bit of a god complex, because Kwon had a gigantic ego. He was doing the rounds in the media saying some really, really terrible things, and actually was a pretty unlikable character. Now, for people that were outside of the Luna ecosystem that saw this coming, didn't like the guy, and believe that really he's kind of finally got what was coming to him. And on that note, I would love to do something a little bit different with you this week.
I'm so excited for this bit. Yeah.
Okay. All right. So we're going to play a little game, because Kwon has been well known to say some pretty dumb things. Now, bearing in mind TerraLuna was a $40 billion market cap, we're going to play a game called Kwon's Moments.
I'm not particularly interested in how U.S. policy shapes around crypto. I am interested as
Kwon's Moments. So I'm going to read out 4 statements, and all I want you to do is guess for me which one of these he actually said.
Oh gosh, okay.
Four statements of varying degrees of stupidity, and I need you to just guess which one he said.
Stupid, and
which one he actually said. Yeah, and for our listeners who are maybe driving along in their car, feel free to play along. So we'll go straight in. Statement A: 95% of coins are going to die, but there's also entertainment in watching companies die too.
Oh, I hope it wasn't that one.
Statement B: I don't debate the poor on Twitter. Sorry, I don't have any change on me.
Wow. I mean, if he said that, then what an asshole.
Yeah, okay. Potentially gets worse. Okay, statement C: silence is a perfectly acceptable option if you're stupid. Pretty rough. And then statement D: everyone here bought Luna, dude, so they're not as poor as your broke ass.
Okay, all right. So they're 4 horrible things to say, pretty much. So
okay, but which one do you think he really said?
Well, I think it's A. I'm going to go for A. Yeah, I think I've seen something on Twitter about that. So
95% are going to die.
Yeah.
All right. Okay. Well, you're absolutely right. A was correct. But I have to be honest. He said all of these things.
He said every single one.
He said every single one of these things.
I knew about A, but I wasn't sure about the others.
Yeah. Well,
okay. So there is a certain thing called karma, right?
Yeah, definitely. I mean, I really think he's been hit by it. When I look at these statements, I mean, this guy, he speaks of narcissism. He's got a massive ego complex. Statement A, which was 95% of coins are going to die, but there's also some entertainment in watching companies die too. He actually only said that in a Yahoo interview last Thursday, less than 8 days ago. So karma has been swift, I would say, in this instance. And, a lot of people are calling this a coordinated attack. It seems difficult to rule that out. When the guy was out spouting the kind of things that he was saying, but he's been humbled. He put out a statement on Twitter a couple of days ago. He had some master plan that was going to solve everything. He then posted again to say that the master plan was coming. Then a third tweet thread where he said, we're going to build back better and stronger, and we're so grateful to the community for sticking by us. Now, that was on Wednesday. It's Friday today, and we've heard nothing since. So the protocol has gone into freefall. Hyperinflation is happening with TerraLuna. The founder has gone AWOL. In fact, I saw in the news this morning that he's had to get special police protection because investors are turning up at his house and are trying to break into his top floor apartment. So yeah, it's going to be interesting to see how this plays out. It's very possible that he could be facing a class action lawsuit. It could be that he's committed some federal crimes on some level and may end up in prison. we're going to follow this story anyway because it's absolutely fascinating, and as we kind of said in the middle of the show, we know that a lot of people have been really, really hurt by this situation, and obviously, whilst we're making light of this, it's not our intention to poke fun at the people that have lost money.
No, because you look at this and you think it's you do your due diligence, you do your research, you put your money in and you take your risk, and that's fair enough. I mean, bloody hell, I've bought some absolute crap over the years, but I've never risked more than I can afford to lose ever.
Totally,
and it's always been a way smaller percentage of my portfolio than some of the tried and tested stuff. So you shouldn't feel ashamed about getting something wrong. There's people out there that have been really what's the word? I wasn't going to say promoting, but advocating the Luna platform. And there's some very big accounts that have been doing that because they're well-meaning. But I guess the message here is, even if you're following traders, YouTubers, anybody, podcasters, and they're saying, this is a great project, I think you should buy it, take it all with a big pinch of salt.
Yeah, please just manage your risk. And of course, the other thing that we'll say is that, that we're hearing all sorts of terrible stories coming out in the media now about people, that just felt that they couldn't recover from this situation. And what I will say is that it is just only money, and whilst it feels like this is the end, just hang on in there. I think, it's important to reach out and speak to people if you need to. And I would just say that, my personal DMs are open. Kevin, I know that you have been speaking to people. And we're also going to just put some links into some resources and hotlines into the show notes. So I think mental health is something that's not spoken enough about in this space. And if
to do that. In fact, we did one a while back in December about managing stress in the crypto space and in life in general, of course. But I would just finish this section of the show with a quote, and I'm not sure who it's from, but I really like this one. Is that your net worth doesn't equal your self-worth. So just remember that. You get another go at everything, but learn your lessons.
Yeah, absolutely. Yeah.
Well, I think it's time to move on to our final segment of the show, for the weird world of crypto. I mean, I feel like this whole show's been about the weird world of crypto, to say the least. But
it certainly couldn't get much weirder.
Sorry?
I said it certainly couldn't get much weirder. But we've but it can. We've scoured the world of weird crypto and blockchain stories, and sometimes we dig up some good stories. Sometimes we get some great ones. This is just strange. So, weird world of crypto this week. The Vatican Museum is going to open an NFT gallery.
So I'm not a very religious man, but my favorite passage from the Bible is, thou shalt use the NFTs, thou shalt hold till the moon, and thou shalt not accept 1 ETH or 2 ETH on Twitter.
That's a good one. It's a great passage. Yeah, it's a really good passage.
And my only church is the Satoshi Church.
Yeah, I love that.
So the guys in white robes and wearing the funny hats and stuff, they're releasing their own NFT collection. So you can forget your apes and your punks. It's NFT Jesus that will be in my profile picture.
Okay, this is interesting. So to be clear, this is all just a little bit of fun and is not having a go at anyone's religious beliefs, but it is true that the Vatican Museum will be launching an NFT gallery to launch great Italian artists into the metaverse, which makes a little bit more sense. So the partnership between the Vatican's non-profit organization, Humanity 2.0 Foundation and Sensorium promises to create the first ever virtual reality and non-fungible token gallery hosting the Vatican's art, content and academic initiatives, including manuscripts and masterpieces. A statement from the Vatican says, "We look forward to working with Sensorium to explore ways to democratize art, making it more widely available to people around the world, regardless of their socioeconomic and geographical limitation." This is interesting. It's nice to see how this technology is being adopted by so many people. We had a story a couple of weeks ago where the UK Treasury were talking about releasing their first NFT, and it really speaks to the use case of this technology. You know, it really has been brilliant. Whether you know, I hear people say all the time, "Oh, I can just right click and save this thing." You know, it's not real art. Well, actually, it's helped establishing artists really go from zero to earning really good income through the digital space. And very often these NFTs are built with contracts that whenever they change hands, the artist receives another chunk of commission. So I love things like this. I think it's great to see the Vatican getting involved. You know, it's a bit tongue in cheek, and we're having a laugh. It's, you know, it's an odd. It's not the most obvious.
Then you know, maybe it's good for mainstream adoption.
Totally agree. Absolutely. If it's good enough for the Pope, it's good enough for me. I'm looking forward to seeing that. It's I wonder who's going to be the next institution to adopt this technology.
I don't know. It could. Well, gosh, I've got a few thoughts, but maybe that's a topic for another show. So we'll wrap up today's episode. So thanks so much for listening. And just remember that quote I said, that your net worth does not equal your self-worth. Mm-hmm. And be careful in this environment because it's choppy waters, and you don't want to do anything that's going to expose you too much. So.
Absolutely. Yeah. Well, tune in next week. We've actually got a couple of great guest interviews coming up as well.
Yeah, we've got Zilliqa coming on the show, which is going to be a huge one. You know, they've got many things that have been built on their blockchain. It's one of the biggest crypto communities out there, and it's certainly one I'm bullish on. So we're trying to get some really, really big hitters on the show now. You know, we've had the guys from LUNA Crash and FTX and Kadena, and we've got a plan to get some big guests on. So if you want us to interview any of your favorite projects, just hit us up on Twitter, crypto_pulse, and we'll reach out and try and make it happen. So until next time, take care.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.